Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, April 24th, 2024. Let's take a look at the charts. Start with this big picture, the weekly bar chart. This channel structure we held inside of for many months. It held the December high of last year and for a while held the lows in, but we did close below it last week by a pretty wide margin. 156.94 is your weekly resistance, able to contain buying through May, even the rest of the second quarter, and below which we do maintain a 2 to 3 month objective, well below the market at the 101.81 January low of last year. So that's about a year and 4 months ago or so. And so that there you have it, holding below 156.94 on the weekly chart. I also want to combine 160.51 because that was a double bottom that did exist up until last week, and that goes back about a month and a half, 2 months. So 156.94 up to 160.51, nearly a 4-point range of resistance, able to contain buying through the rest of the second quarter, and below which 101.81 remains a 2 to 3 month target. And that is that. So any upward retracements into the upper 150s, low 160s should be considered a short sale opportunities as we move into the third quarter, 101.81 expected over that time frame. On the way down, I'd mentioned how this long-term trend line that stems from the March 2020, I'll call that the COVID low, against that 101.81 low from January of last year, 138.35 is the number. Now, I've reduced it to a session containment level only because, we tested it basically on Monday. I can't say we tested to the very tick. I don't remember exactly what the low was, but we came pretty darn close. So I'm going to call that a test of the 138.35 long-term trend line. Yes, can contain weekly selling pressures. And so I've reduced it to a session containment level because if we fall back to it now, Wednesday, Thursday, and given the longer-term sell signal that remains in effect below 157.79 on the daily chart, I just don't want to encourage aggressive buying, especially for 3 to 5 day swing traders. I have decoupled, if you will, support. Used to be a range 138.35 down to 133.26. This area was right, they were right on top of each other 4 or 5 days ago. Now they're beginning to diverge. They're beginning to open up. 133.26 is dropping at a pretty good pace. In this formation, I am comfortable buying on a weekly basis. It is buying into a longer-term sell signal, but the market rarely goes straight down. It goes down for a while, then retraces. It's usually in a bear market, 3 steps down, 1 or 2 steps back, 3 steps down, 1, maybe 2 steps back, so forth and so on. And so we can bottom out at 133.26 through next week, and from here possibly rally back into the upper 150s again within 1 to 3 weeks of testing 133.26. A settlement today, which I'm not expecting, I think is highly unlikely given the proximity and such, but a settlement below the 133.26 channel bottom. And you can see our 2 to 3 month target far left over here. I wish I had a horizontal line, but it's going to be right about there. If we close below 133.26, we are probably 2 to 3 weeks away from reaching our 101.86 target, a 101.81 target. So 138.35 session containment, and our 3-star weekly support dropping on a daily basis at 133.26. So how to play this? Holding below 145.47 today. Now I'm talking to day traders, and we have this red line, just a simple trend line off the February-March lows that held briefly to the downside for a day. We gapped below it on Monday. It did roughly contained buying pressures on Tuesday. We certainly pushed above it, did not close above it. 145.47, a soft intraday pivot point, below which 138.35 in reach. If we push or open today above 145.87, 152.37 in reach. That is nothing more than this, a meaningful low that was put out. I think that was a May low of 23 before the incredible rally that played out to the July high. But 152.37 can contain session strength. And if we push our open above 145.47, you should allow 152.37 on an intraday basis. Until then, opening and holding below 145.47 will keep 138.35 in reach, where a daily low can be placed. If we break 138.35 today, 133.26 is likely, where we could bottom out for the week itself, and from here round back up perhaps into the upper 150s. So, the 2 to 3 week swing trade, I did outline over a week ago when we gapped below this formation, mentioning the 133.26 level as our next 2 to 3 week target. We're over a week into it. And it can contain weekly selling pressure. So 2 to 3 week swing traders, if you went short when we gapped below the 157.79 area, you may be holding out for this formation at 133.26, and that is fine. If we test 133.26 today, my suggestion is to cover that short position, at least in part, because this market can then round back up into the upper 150s within 2 to 3 weeks. But as I said a moment ago, closing below 133.26, selling pressures continue to build, and our overall objective at that, that's not the right chart, at the 101.81 level, then likely within 2 to 3 weeks, where we could actually double bottom. I'm going to say on a monthly basis only. I don't expect a long-term low here, but it may happen. We may bottom out here into later year and round back up again. I just have a feeling that we're going to take this area out. I don't know why I keep saying that, but I'll just leave it at that. Let's talk upside here today very briefly. Closing above this 152.37 level does signal a test tomorrow or Friday of this upper 150s, low 160s, 157.79 to 160.51, able to contain buying through the rest of the second quarter, and below which the 101.81 level remains a 2 to 3 month target. If on Friday, and I think it's highly unlikely, but if we did close back above 160.51, which clears all of these levels on the weekly chart, and the same on the daily chart. If we close back above 160.51, I think we have a good low through May. I'm guessing this new channel top at 179.32. Well, I don't know about through May. Let's just say into May trade, well into May trade. Closing back above 160.51, we've got a 1 to 2 week buy signal to 179.32. This formation able to contain monthly buying pressures and a significant upside pivot point through the rest of the second quarter and into the third quarter, but I'm just not going to go there right now. It's so irrelevant, it's ridiculous. So I'm just going to leave it at that. I will show you this chart for the day. I'll leave it at that. Please click like, share, subscribe. Check out wickedstocks.com. If you're looking for Apple analysis, we have it there. We have a 5-day free trial. We have daily triple Q, daily SPY report, so forth and so on. Please click like and share. I will be back tomorrow, of course, with Thursday's Tesla report. And you have a great day.